Welcome to the Deep Dive. Today, we're really zeroing in on Tesla's first quarter earnings for 2025.
Yeah, and not just the report itself, but some of the chatter around it too.
Exactly. We've got the official Q1 update from Tesla, the earnings call audio and transcript,
Summaries from Alpha Street XTB.
and even an article mentioning potential, consumer reactions.
So plenty to unpack.
Our goal today is, to really get a handle on what's actually significant here,
Yeah.
because it looks like a challenging quarter on the surface.
Definitely some headwinds.
But the narrative from Tesla seems very focused on the long game, right? AI, autonomous driving, energy storage.
Absolutely. It's that contrast, isn't it? The near-term numbers versus this big push towards future growth.
Okay, so let's dive into those financials first. Q1 2025 revenue, $19.3 billion.
That's right. And that's down 9% compared to last year.
And it missed the estimates too. So what's behind that drop?
Well, it's a few things hitting at once, really. Lower vehicle deliveries, for one.
Which was partly the Model Y line changes, wasn't
Yeah. Yeah, exactly. They were retooling across all four factories. Then you've got lower average selling prices, ASP.
it? Okay.
And foreign exchange rates didn't help either. Negative impact there.
But it wasn't all bad news on the revenue side.
No, no. They saw growth in their energy generation and storage business, which is becoming increasingly important.
Right.
Services and other revenue was up too. And they actually got more from regulatory credits this quarter.
Ah, the regulatory credits, always a factor.
Helps cushion things a bit.
Okay, but then we look at profit,
Hmm.
and the numbers seem pretty stark. JAP net income,
Yeah, that took a big dive, down 71% year over year.
71%. Wow. That's only $2.4 billion, or 12 cents a share.
Correct. And that also missed what analysts were expecting.
And the non-GAAP figure, still down.
Still down significantly. $79 billion or 27 cents a share. That's a 40% drop from last year and also below estimates.
So what's squeezing the profit so much? Is it just the lower revenue?
That's a big part of it. But let's look at the operating income first. That was down 66% to $C.4 billion.
Which means the operating margin shrunk quite a bit.
Right, down to just 2.1%. The main culprits were, yes, the lower vehicle ASP and fewer deliveries.
Okay.
But also they increased their operating expenses, spending more on R&D, particularly for AI.
Ah, investing in the future stuff.
Exactly. Now, offsetting that somewhat, they did have higher gross profit from the energy side,
Good.
lower costs related to ramping up Cybertruck production compared to Q1 last year,
Makes sense.
and lower costs per vehicle generally, including raw materials. Plus, as we mentioned, those higher regulatory credits help the bottom line too.
So it really is a mixed picture. Sales and price pressure hurting profits, but, some efficiency gains and other business lines helping out.
That's a good way to put it.
But interestingly, even with profits down, their cash situation looks pretty healthy.
Yeah, that's a crucial point. Operating cash flow was solid at $2.2 billion.
And free cash flow.
$0.7 billion. So after their investments, they still generated cash.
And their total cash pile actually grew.
It did, up by $0.4 billion, bringing their total cash and investments to $37 billion.
$37 billion. Okay, so they have a strong cushion.
A very strong cushion,
Mm-hmm.
which, is vital given their investment plans and the current market uncertainty.
Right. Okay, moving to operations. You mentioned the Model Y line changes. The report really flags this as a big deal, doesn't it?
Yeah.
Be it across all four factories without major issues.
Absolutely. They highlighted it as kind of an unprecedented operational feat, shows how much their manufacturing and supply chain management has matured.
And they said the ramp up of the new production is actually faster than previous ramps.
Yeah, outpacing past ramps, which, if true, is pretty impressive given the scale doing it globally like that.
And it wasn't just cars. Energy storage had some milestones
Yeah.
too. Shanghai Megafactory.
Yes, produced over 100 megapacks in Q1. That's significant.
And overall, energy deployments are growing.
Big time. On a trailing 12-month basis, they deployed a record 10.4 gigawatt hours.
Gigawatt now. That sounds like a lot.
It is. And Powerwall, the home battery, also hit a record over 1 GWh deployed just in the quarter. First time that's happened.
And the Shanghai Megapack production ramping up. That seems strategically important, right?
Yeah.
Especially with potential trade issues.
Definitely. Localizing production there is key.
They also mentioned something about autonomous movement within the factories.
Oh yeah, this is pretty cool. Model 3, Model Y, and Cybertrucks are apparently driving themselves autonomously from the end of the production line to the outbound lots.
Seriously, no drivers.
In Fremont and Gigafactory, Texas, yeah. That's what the report says. Shows the progress of their FSD stack, even in, like, controlled industrial environments.
Okay, that leads perfectly into the core tech stuff, AI and autonomy. They're really doubling down on the vision-only approach.
They are, and they're pointing to the FSD supervised launch in China as validation.
How so?
Because, they say, it launched there without needing country-specific training data. The idea is their global data set is robust enough.
Okay. That would be a huge scalability advantage if it holds true.
Potentially massive, yeah. Less localization needed for the core system.
Now, the robotaxi pilot, still on track for Austin in June 2025.
Still on track, according to the update. That's going to be a major, major milestone to watch.
Definitely. And Optimus, the robot.
Progressing. They've got builds happening on the pilot line in Fremont.
And they expect to use them more widely soon.
Wider deployment in factories is expected. The goal seems ambitious, potentially thousands working by year-end.
Wow. Plus the usual software updates, adaptive headlights, rear cross-traffic chime. Little improvements happening all the time.
Right, continuous improvement through software. That's standard Tesla now.
Okay, let's switch gears slightly. Energy and services. We touched on energy storage growth.
Yeah, they see it as a massive pillar, especially with AI data centers needing so much power.
But tariffs are a potential issue there.
They acknowledge that, yes. The impact is likely bigger on the energy side than automotive.
So what are they doing about it?
They mentioned planned actions for stabilization could mean more U.S. production, diversifying sources, things like that. They seem confident they can manage it long term.
And the services business.
That's looking pretty good, too. Gross profit up 25% year over year.
What's driving that?
Improvements in non-warranty maintenance and collision services, mainly, becoming a more profitable part of the business.
And the supercharger network just keeps growing.
It does. Over 1,800 new stalls added, 17% year-over-year growth, delivering a huge amount of energy, 1.4 terawatt hours in the quarter.
That network is such a key asset for them.
Absolutely. And increasingly important as they think about robotaxis needing reliable charging.
Okay, let's look ahead. The outlook section. They acknowledge some uncertainty, right? Trade policy, political sentiment.
Yeah, they flag that pretty clearly. Rapidly evolving trade policies and changing political feelings could impact near-term demand for both cars and energy products.
It's a volatile world out there.
It certainly is. Lots of macro risks for any global company right now.
But despite that, they're sticking to the plan. Expanding the business model to autonomous robots, cybercab.
Absolutely. The vision is unchanged. And those new, more affordable models are still slated for production start in the first half of 2025.
But the strategy there is interesting, using existing lines.
Right. They're going to leverage both the next-gen platform and current platforms, but produce them on existing assembly lines initially.
Why do that instead of building new lines for maximum cost reduction?
It seems the priority right now is volume growth and capital efficiency. Get the cars out faster, using the capacity they already have, nearly 3 million vehicles, before investing heavily in brand new lines.
So speed to market over maybe maximum possible cost savings right at launch.
That seems to be the trade-off, yeah. A pragmatic approach, maybe.
And the cybercab, the purpose-built robotaxi that's still pursuing the unboxed manufacturing method.
Still the plan. With volume production targeted for 2026, they keep emphasizing how revolutionary this unboxed system is supposed to be.
Can you remind us what's different about unboxed?
Sure, instead of a car moving down one long line getting bits added, you build large modules of the car separately, in parallel.
Okay.
Like the whole front section, rear section, floor pan with battery, and then you bring these big chunks together at the very end.
And the benefit is?
Supposedly much simpler final assembly, way less factory footprint, higher automation, and ultimately lower cost. It's a radical departure if they pull it off.
Interesting. And long term, they expect AI, software, fleet profits to drive profitability.
That's the vision. Shifting from primarily hardware margins to software and fleet-based recurring revenue.
And they feel they have the cash to fund all this. Product roadmap, expansion plans.
They state they have sufficient liquidity. That $37 billion certainly helps.
Okay, let's get into some of the earnings call highlights and news tidbits. The CEO's comments about his time spent on government efficiency stuff, the DOGE initiative.
Right. He addressed the criticism, framed it as tackling waste and fraud, suggested the pushback came from those benefiting from that waste.
Did you say how much time he's spending on it now?
He indicated the initial setup phase is mostly done, so he expects to spend significantly less time on it going forward, allowing more focus back on Tesla.
And he also made a point of saying Tesla isn't in some kind of near-death situation, right, despite the tough quarter.
Yeah, he pushed back strongly on that narrative, said they've been through much tougher
And
times.
he reiterated the big vision, most valuable company in the world because of autonomy and robots.
Didn't shy away from that at all. Still believes that's the trajectory.
And he gave a timeline for when autonomy might actually start hitting the financials.
He did. Suggested we could see a material impact around the middle to second half of next year, 2026.
Mid to late 2026.
And then potentially exponential growth after that. Very bullish outlook on the autonomy timeline.
That is bullish. Okay, what about supply chains and tariffs? They talked about localizing more.
Yes, big emphasis on localizing supply in North America, Europe, and China. That's their hedge against tariffs and logistics chaos.
And they gave specifics, like North American content.
Yeah, mentioned over 85% North American content for their high-volume vehicles made here. That helps qualify for incentives and reduces tariff exposure.
What was the CEO's general stance on tariffs?
Kind of nuanced, said he generally favors lower tariffs for prosperity overall, but
Right.
acknowledged the president has the prerogative and sometimes tariffs are needed to counter predatory practices by other countries.
Okay. Back to robotaxi. The plan is paid. Autonomous rides in Austin starting June 25, using Model Ys.
That's the stated goal for the pilot, yes. Paid rides, fully autonomous, in Austin.
And expansion hopes by end of year.
Hope to expand to other U.S. cities by the end of 2025, but that's heavily dependent on regulatory approvals.
Which is always the big unknown.
Always.
Yeah.
But the vision is rapid scaling, talking about potentially millions of autonomous Teslas in the second half of next year.
Millions in H2 2026. That timeline seems incredibly fast.
It's extremely ambitious. We'll see. They did mention developing localized parameters, like for snow, but positioned it as a nice to have initially, not a blocker.
Okay. And Optimus Progress.
Yeah.
Thousands in factories by end of this year.
That's the goal.
Yeah.
And aiming for production of 1 million units per year within 4 to 5 years.
1 million robots a year. Mind-boggling scale.
If they achieve it, yes. Huge implications for manufacturing and beyond.
What about the affordable models? Still coming this year, using existing lines.
Still on track for release this year, yes. Leveraging existing lines to prioritize low cost of ownership.
But maybe a slower ramp than first hoped.
Yeah, hinted that the ramp might be a little bit less than initially hoped due to, broader industry turmoil. Pragmatism again, perhaps.
And just to clarify, the current Model Ys can already drive themselves, like in the factories.
Correct. The hardware is there, the software is capable, as shown by the autonomous factory movements.
And the idea of a car driving itself to the customer, that's a real possibility this year.
He floated that possibility for cars coming out of Austin and Fremont later this year. That would be quite something.
Truly. Okay, the unbox method for Cybercab. First big builds, end of Q2 this year.
That's the target. First major assembly builds for Cybercab by end of June. Volume production still slated for next year, 2026.
They really seem to believe this production system is key.
They frame it as absolutely fundamental to achieving the low cost needed for robotaxi and high automation.
Now, there have been rumors or talk about brand damage, maybe political backlash. How did they respond?
They push back by highlighting strong metrics, Model Y being the best-selling car, not just EV, in California in Q1,
Okay, that's a strong data point.
and a record number of test drives globally. Suggests underlying interest remains very high, even if there's noise.
But they acknowledge the economy is a factor.
Oh, yes. Acknowledge that broader economic uncertainty definitely impacts big purchases like cars across the board.
What about batteries? Any constraints there?
Apparently not for vehicles currently. Supply seems okay.
But tariffs are hitting the energy side.
Yes, that's where the tariff challenge is more acute for batteries. But again, they say they have plans, more U.S. production, alternative sourcing.
And FSD pricing, $99 a month.
Yeah.
Some think that's too low.
Yeah, there was a comment suggesting users feel it's already worth more. Tesla hinted at potential multi-tiered pricing for unsupervised FSD down the road.
Makes sense. And maybe relaxing the driver monitoring eventually.
Yes, gradual relaxation of the attention monitoring is expected as the system proves itself safer.
What about India? Any update?
Still working on it. High tariffs remain the big hurdle, but they still see it as a very important long-term market, big middle class.
And the vision-only concerns. Rain, fog, sun glare.
They address that technically, said they use direct photon count, essentially seeing light levels directly, bypassing the image processor that can get washed out by glare or struggle in fog, claiming the cameras can see in conditions where humans might struggle.
Interesting tech detail. And the affordable model, the focus is really just affordability using current lines, not some radical new design.
Seems that way. Leveraging existing platforms and lines suggests it's more about cost optimization within familiar form factors rather than a completely out there design initially.
Got it. Okay, so wrapping this all up, our deep dive into Tesla's Q1 2025. Definitely a challenging quarter financially.
Yeah, the numbers were hit by those production changes, market headwinds, lower ASP.
But the focus is clearly intensely on the long-term plays. AI, autonomy, energy.
Absolutely. They're making what look like significant strides there, even if it's costing them in the short term on the P&L.
Key milestones coming up,
Yep.
right? Robotaxi pilot soon, affordable models launching within the year.
It really highlights that tension, doesn't it, between near-term profitability pressures and these huge, transformative, but also expensive long-term bets.
This quarter felt very much like a transitional one, laying groundwork.
Yeah, navigating the present while building furiously for a very different kind of future they envision.
Which brings us to a final thought for you, the listener. When you consider these massive ambitions, self-driving cars everywhere, humanoid robots in factories, this unboxed manufacturing,
And you weigh that against the complexities of global trade, politics, regulation, competition.
what do you think are the biggest potential hurdles Tesla faces in the next, say, 2 to 3 years? On the flip side, what could be the most truly transformative outcome if they actually pull off even part of this vision?
Yeah, something to really think about. We definitely encourage you to dig into the source materials yourself, the report, the call transcript, and form your own conclusions.
Thanks for tuning in to The Deep Dive.